Now it's one of the iconic images of the credit crunch. 2 years ago today, hundreds of financial workers were escorted out of their London headquarters carrying all their belongings.
They were staff at investment bankers Lehman Brothers. The company's collapse, America's biggest bankruptcy, sent shockwaves around the world.
And 2 years on, that catastrophe continues to shape the capital's financial landscape, as our business correspondent Glenn Goodman now reports.
When Lehman Brothers collapsed, it caused panic in the banking industry, leading to costly bailouts of other banks and leading to rock-bottom interest rates. Bringing interest rates down helps businesses to recover, but it also means low rates for savers. Meanwhile, many borrowers have found it impossible to get loans from traditional banks. Enter the credit unions and the peer-to-peer lenders. Credit unions are a bit like building societies used to be. They operate on a small scale with only local people allowed membership.
The high street bank, when computer says no, computer says no. At least here you can talk to somebody and you normally get a response straight away.
I'm not working, so it's all done through here.
And they make it easy for you to borrow here?
Yes, a lot easier.
People like Erica can take out small loans here, while the high street banks aren't generally interested. Since the credit crunch began, credit unions have exploded in popularity, growing by around 50%. But it's not just the lower end of the banking market that's changing. Zopa is a peer-to-peer lending website, matching up people who want to lend their money with those that want to borrow. Rajen Shah was sick of the rock-bottom interest that he was earning in bank savings accounts. He now earns around 8% a year, lending to highly credit-worthy borrowers through the Zopa website.
I deliberately chose Zopa when I started because they're the established player. They've been around for a good 5 years. But I can certainly see more and more people flocking to these sites, Zopa, etc., as they see the returns that they can achieve there compared to the returns achievable elsewhere.
Our business is rather like a traditional old-fashioned bank in the sense that we lend £1 for every £1 that we get in from one of our lenders. So on that basis, we're not gambling with their money, and the business therefore isn't vulnerable to any mistakes that occur from that gambling.
I've been quite disappointed by the reaction of British people, if you like, the consumer, to the credit crunch, because we've been given an opportunity really to change the way we bank, really to vote with our feet and go to credit unions to demand alternatives like Zopa and other online lending and borrowing portals. But an awful lot of us have just thought, oh well, they're all the same, it's too hard to do, I'll just put up, better the devil you know.
We asked my favourite economist to sum up, in short, are things really changing in the banking world?
Credit unions are insignificant relative to the banking system as a whole. Is that short enough?
OK, so things are changing, but not very fast. Glenn Goodman, London Tonight.